forward and understand more about entries. Okay. So let's quickly revise what we learned till yet. So first of all, when you are analyzing any chart, we need a stock to be in an uptrend. An uptrend tells you that the stock is trying to progress ahead. It's in the direction in which we are betting on. For an uptrend, we simply use the moving averages. So these are like 50, 150 and 200. Now, as the stock is moving up in an uptrend, it forms bases. Bases are consolidation periods. Typically, these are resting stages. These are resting phases in the stock's journey. And every stock, if it has to move from 100 rupees to 400 rupees, it will not happen in 3 days, 4 days. It will take probably months for the stock to become a multi-bagger. And when it is becoming a multi-bagger, the price chart will look like this always. Move up and then consolidation, move up, consolidation. In this, it can fall like 30%, 40% also, 20%, 15% also. These can be of different depth, ranging from 10%, it can go to 50% also, right? Now, these are called bases. What we want to do is to trade on the breakouts from this base. So in this base, it's digestion of this run, which has already happened, and it takes time. But once it's said that it is done and it's moving in your direction, that's where you want to get interested in the stock. Okay. But do we have to trade all the bases? Do we have to trade all the bases? We don't have to trade. We have to only trade tradable bases in which you have momentum coming in. You can also call it as range expansion happening. That's where you want to be. Plus, the stock should have other things which we have learned. It should have a good structure. It should have a good character. Okay. Then growth or high volume. Typically, all these things in an uptrend, then you have the structure, percentage from high. When the momentum is coming in, what's the percentage from 52-week high? And we want to be in 25-26% range. Too deep is just too early. Okay. Character, growth. These all things will make a base in which you can bet on, which is ready. Okay, tradable base are ready to trade base. Okay. We also understood about different type of bases. There are 3 kind of bases. Okay. First one is your upright base. Second is your up-down base. Third is your up-slope base. These bases helps in understanding the supply zones. Supply zones are the resistance zones where majority price action is there. Okay, where majority price action is there. That's where your supply zone is there. Okay. So these are all the things that we learned till yet. And now let's move ahead and understand what is the entry point. So once you have momentum, let's see some example. This is very recent example, South Indian Bank. Now look at this stock. These are all the moving averages and uptrend. Let's replay it and then see on this particular day. Let's see till here. Now the stock, this is a very good stock and good uptrend. Like here, you have a good uptrend up here, and then the stock is moving up, moving down in an up-down base. It broke out of here. This is an up-down base, so this is your supply zone. You have the structure here, good higher low. So you have uptrend here, higher low percentage from my 2.6 percentage. This percentage move is pending. We'll conclude it today. Price above EMA, this is simply above 50 EMA. Okay, this is a basic one, so that you don't get up early. Okay, just for precaution, it is there. Okay, price greater than EMA is price greater than 50 exponential moving average. Okay, that's it. The main thing in this whole AI trend analysis is your structure. Okay, which is like fully automated now. Now here, but you don't have a growth part up here, and it's not a high volume up here. So nothing up here, but nothing up here that you'll do. It did worked, and now high volume came up here, but it's now you'll have to see. Okay, where do you want to enter? Let's see some in which all conditions are there. It will be better. Let's go to Latix also here. This is also a recent one. It's better in which all conditions are there, because that's where you will have to trade. So here, this is an uptrend. The stock was in a downtrend here. Then it again picked up the pace. Here all the moving averages aligned somewhere. And if you will see here, the stock is now in an uptrend. The 50, 150, 200, all these are setting up very close to each other, moving on the upside. You have this complete base, and here you have a momentum coming in. You have a higher low, which is no. But as we understood, this is a correction of that higher low by way of spending some time exactly at the supply zone. Okay. It's an up-down base, so this is your supply zone up here. And this is where your momentum is coming up. It's all above 50 and everything. This is correction of the higher low. I'm just marking it so that you don't miss. Correction of lower low by spending some candles up exactly at the breakout zone, exactly at the supply zone. Okay, now this is your momentum bar, in which very good high momentum is coming on. It's a big candle, 6.5% candle. It's a range which is expanding up here. Okay, you can see the volume up here. This volume, 15th October, you can identify it easily. Okay, that yeah, it's very good. It's very high volume. Nothing brainer you will have to use. Now, it's not like the day in which the momentum is coming, you'll have to buy. After that, we need a follow through day. Okay. We need a follow through day. Now, let's understand what is follow through day. So momentum, when it is coming in any stock, it's just the first step. Okay. It's just one day. Right. One day you have a big candle up there, but that doesn't mean that it will move in that direction itself. Okay, so if there is one black candle, these are range expansion candles, and it doesn't mean that the stock will move up in this direction. It can happen that for one day it came and then nothing happened up here. Like here it fully gave back, moved down. Here momentum came, it was a breakout also up in this here. It's a breakout also up here, but then it completely rolled over. So it doesn't mean that two momentum candles are coming, that it means that it will progress. For that, we need some further confirmation, which is follow through day. So if there is a momentum which is progressing in the right direction, in the direction we want, then if it takes a pause, two things can happen. So the stock is, for example, moving up. This is your momentum candle coming up here. If it takes a pause and then resumes its journey, then that's a follow through day. For example, in this case, you have the momentum coming up here and look up here. This is a pause. Okay, after the momentum, after the range expansion, it's taking a pause. 1 day, 2 day, 3 day, 4 day, 5 day. It's a 5-day pause up here. Now you see this triangle. This triangle tells you the first day of pullback. Okay, it's already in the indicator. It's the first day of pullback, so that it becomes easy visually to look at. So this is your first day pullback, second day, third day, fourth day, fifth day. Now sixth day, it's a breakout. It's a final breakout. Now that's confirming this momentum. This momentum which came up here, this pullback and a follow through and a breakout is confirming that the stock may move in that direction itself. Okay, that it will move in the direction of the momentum which is coming up. Is the audio video clear? Okay, some people are messaging that video is not clear. Can anyone confirm? All clear, okay. Thanks. So a pullback, it can be 1 day, it can be 2 day, 3 day, 4 day, it can be any even. And after that, when it progresses above this, the high of the momentum bar, that's a continuation of momentum. Okay, like in this case, then it gave a clean move 10-12% till yet. It's a very recent example. A 10% move. Let's see CBDL. Don't worry, we'll go through a lot of examples today. Now look up, let's analyze this. Which kind of a base this looks like? Let's see. How do you guys apply? Which kind of base it looks like? It's up slope base, right? It's up slope base. How every breakout is getting failed. Look up here. This is a very small range. Failed. This is a small range here. Failed. Let me draw it. Small range failed. Then again here a breakout failed. Okay, so that is sufficient to understand that it's a sloppy base. So can like draw like this where we can have majority of the candles. Okay, so it's a upslope base. You have this good movement up and then it's a sloppy base. Now in this sloppy base, you see that the momentum is coming up here. Let's move up here. Okay, this is where momentum is coming in the base. It's not a breakout. It's before the breakout, so momentum is coming here. This is where the stock will get your attention. You will not get any attention up here. It's of no use. This is also no use because there is no momentum which is coming yet. It's just a breakout and we don't want to focus on any random breakout that's happening. Okay, we want to focus on only where big momentum is coming, because we understood in the previous session also that all the big movers had this big range expansion happening. There might be movers apart from that also, but those were not the real big winners. All the real big winners, they had these starting good momentum, because good momentum, further good momentum will come. Okay, so stock of no use here. This is where you get interested and then you simply wait for a pullback. to see whether there is some sense of urgency or not. So what we are looking at after a momentum bar, we are looking for some pullback. Pullback can be from 1 day to, I will tell the upper limit for it. In the pullback, we are then looking for urgency to move ahead. Okay, because that's what happens when some stock has to move big. Okay, it will correct and suddenly demand will come again. Okay, and that's what we want. We want the stock to prove itself up. So here you have a momentum, you have this pullback. Okay, so after this momentum, this is not a pullback. Here also not a pullback, because these are breaking those high, right? It is above high of this candle, high of this candle. So this is your first pullback day up here. Second, third day it tried to move up, but it did not sustain. Maybe for 1-2 minutes it went up. Third day, fourth, then again, here it is a good thing, though it did not close up good, but it's a good thing. Why? Because it's showing you a sense of urgency. It's showing you a sense of urgency. So again, then I'll see whether this levels get break. So 1 day, 2 day, 3 day, 4 day. And this is your 5th day after this repeat urgency. And this is where the stock breaks out. Okay. And then it moves ahead. So follow through days confirm the initial momentum. So this candle, this breakout above this level that happened, this confirms up this initial momentum. Okay, because initial momentum can come, and in half of the cases it will simply go down. Okay, it does not sustains. The pullback simply, the stock simply gives up all the momentum, initial momentum. That's not we are looking for. We are looking for momentum to come. If there is a pullback, that's a good thing. And if it progress ahead, then it's a confirmation of this initial momentum, and that is where we take our entries. That is where your entry will come. So your entry will never come on the breakout. It will always come on the follow through day. Okay, sometimes follow through day and breakout can be same. For example, in this, it's a breakout. This candle is a breakout. This candle is a breakout of this upslope base. And also it's a follow through day of the momentum bar. So both are together. So this is your actionable. This is where on closing, because on closing itself, in this example, we can know that, yeah, it's a breakout. The breakout is done. So that's where your entry will come. Let's see some more examples. Some recent one. SCI. So this is a complete base. Look up here. You have a momentum coming up here. Though it did not close up good, but it's a range expansion. Okay. The range did expanded. So that is sufficient to grasp our attention. Okay. You have this range expansion. You can see the black bar. But after this, the stock simply went down. Okay. It took a lot of time. Next time again, it did happen up here. It did happen up here. Again, range expansion good in these two candles. Okay. And after that, this is the level of urgency that you need. The 1 day pullback, 2 day, 3 day, 4th day, and 5th day, it's a breakout. Okay. 5th day, it's a breakout. Let's see some more. So let's see up here on this particular day. So this is an up and down base, clean uptrend, and then the stock coming up here. This is the breakout. You can see the breakout. It's on a very, very good volume, good identifiable volume. You can clearly see that it's big. Okay. Now after that, one more day momentum continues, and here you have a pullback. Okay. Now we want to see whether we move ahead or it simply moves like this and gives back fully. Okay. If it moves up here, that's the kind of urgency we need. Okay. That's the kind of thing we are looking for. So next day itself, it had a break of this follow through and it progressed ahead. Okay, here. So this will be like in 2 days, 15, 16, 17% kind of up here. Immediate that came up here. Let's see, move here. This is again an up and down simple base. Let's see here. So all things are fine. Character growth is not there, but it's a high volume stock uptrend. Structure is fine. Percentage from highs 3% move within the ranges. EMA, all things right. Here you can see all green. It's an up down base. Oil drop the supply zones where majority of the candles are there. Now here you have a initial breakout. You can see high volumes up here. And second day momentum, after that it's pulling back. Now this is again trying to move ahead. That's what we need. That's what we need. It had this 1 day pullback, 2 day, 3 day, 4 day, and 5th day it's ahead. This one went a big bit. This was big. Clean moves. This is the kind of momentum we are looking for. This is why we are doing all the stuff so that we can capture it in a shorter period. So this will be like 40% in a matter of 5-6 days. Let's see some more. Let's see JBMA. This one. Okay. This is a uptrend here. This is a base up here. This is breaking out up here. Now pullback happened up here after the breakout. Let's see on this particular day. Okay. So it had a 2-day good move. This is 9%, then 7%, and after that you have a pullback. Okay. In this case. Now we can buy out of the base also, like this is out of the base. It's not, it's second day also momentum came and on somewhere 3, 4, 5th day you have a pullback. But it should not be too late. Okay, it should not be that, let's say this is moving up here. So this is how this one moved. We don't have to enter up here. You on the first pullback you need to enter, and so now you can see up this turned red up here, this percentage move. Now this will tell you extensions, okay, that you are not too late in the overall trend. These are extensions from 10 EMA and 20 EMA. Okay, typically when a stock is moving in a single side swing, it most of the time in very good winners you will see that it's above 10 and 20. These are 10 and 20. Okay, so if it's yet too extended in this move, then this will turn red up here and it will tell you that you are late and simply avoid now. It takes care that when we are buying out of the base, wherever the pullback is coming, that you are not too late in the trend. What will happen sometimes, the stock will simply move ahead. It might not give a pullback. And when it gives a pullback, it can be a bit late. Okay, so to avoid that, we have taken this up here so that we just don't enter in a very late kind of thing. Okay. We'll see examples further, so it will get clear. So this is kind of here, somewhere the buying will be, and here. Now let's see how you will enter up here. Okay. Let's see how you will enter up exactly in this candle and what are these lines which are coming. Well, you can see two lines coming up here. So this is your entry and this is the stop loss. Okay, this dotted is the stop loss. Typically, when I've gone through tons and tons of winners of last 4, 5 years, 6 years, you will see that once a stock has picked up momentum, once you have this momentum and a follow through, stock typically doesn't go back below these ranges. It shoots up simply in your direction. Okay, it will just keep on moving ahead. That's what we want. So this is typically a 3% below this range, 3.2% around below this range. It is automatically done. You don't need to do anything. Our AI indicator takes care of it. This is your entry and this is your stop loss. But while entering, you'll have to take care that you don't enter in a very, very FOMO based way. Okay. For that reason, we simply wait for a 5-minute good close above this line. So a lot of time it will happen in the opening, the stock will simply be above your area and then simply close bad. In this case, this is a bit earlier one. So here you will enter on a good 5-minute close. Okay. On a 5-minute close in this candle, you will enter as soon as we are above this price level. And let's say it was somewhere here, the 5-minute close, because this is 2023 chart, we won't be able to go to 5-minute time frame. We will go in that time frame in some other example. At the moment, let's say your 5-minute close was like somewhere here, 182, 183. So your stop loss will be here. So what you can do is, once you have your levels decided, you can simply mark them. So you can mark this is somewhere your entry. Let's go on to bar back. So this is your entry. You can simply draw up a line up here. Or any other way you want to do, but I usually do this. This is the stop loss level. Okay. Now, right, everything else is right. Say for example, this day I'm waiting for this trade to actually happen. Okay. I'm waiting for it to actually work and move in the favor. Two things can happen up here. One is that this simply goes down here. And momentum vanishes. It was just a 2-day momentum and nothing happened. There can be a number of reasons, but we don't have to worry about the reasons. All we need is to take some action if it continues moving up, because that's a continuation of this initial momentum. This is the breakout, but this is nothing to do because it's the first momentum which is coming up here exactly on the breakout. It can simply fail. And let me tell you a fact that 50% of it will fail. It will have one day momentum coming in and then momentum simply going up. Now here, let's say your 5-minute close on this day is somewhere 181. So this is your stop loss. Okay, I will again repeat this 5-minute closing basis because this is where you will do problem. Okay, you will simply not be able to wait for a 5-minute good close because you will be in a ton of FOMO. You'll see some big candle and on a smaller time frame, and you will be in so much FOMO that you will just throw all the things in garbage. Okay, all the learnings you will put aside. So we need a 5-minute good close so that it's just not a one-off. Okay, we don't want that 1 minute or for 1 second the price touched and we took entry based on that. We need it to show some kind of very, very basic strength, and that's why so smaller time frame we are going 5 minutes, because we just need a basic kind of confirmation that yeah, it's a good close, it's moving in our direction, nothing else. It should not be like for 1 minute touching or for 1 second it touched. We'll see that examples also. Let's finish this example first. For stop loss, This is your level. In this case, for example, 3.7%. Okay. And for this, you don't need to wait for any closing or something like that. If it touches, you get out. If it touches the stop loss level, you get out. Okay. This is important because I know in advance I'm telling you, you will do problem up here. You will not be able to wait. You will be in FOMO. Okay. You will be in FOMO that, oh, this is just going. What if this goes on? I'm missing lower price. I'm missing lower price. That's what will come in your mind. Okay. So this is important. So stop loss, you don't need to wait for anything, because we are already entering in a very, very confirmatory stage in a high momentum area. If it has to go, it simply has to move ahead. What if the stop loss hits and then it again moves ahead? We can take a re-entry. Okay. You can always re-enter up there. Don't be afraid of re-entries. Just see, this is moving up. This was your level and it simply moved up. Very good trade this would have been. Okay. Let's see some recent one, Tata Investment. So look up here, this is your breakout. This is a very high resistance zone. Or you can draw up here also. Many candles covering up here. You have this breakout. And you can see that it's on a very big volume, in fact. And do we have to do anything up here? Now look up here how it happened. It did a breakout up here also, but it gave fully back. Momentum did not continue. It was just 1 day, 2 day off, and then it fully went back. Okay. Here, look up this range expansion happened up here in these 2 days. This was a good range expansion in 2 days, 11.8% kind of. It's a black candle up here, but then it fully gave back. And it just took a lot of days. It almost took, this is which day? It's 7th, 8th August, and then it again happened on 17th September, almost 1.5 months. But here it's not the same as we have seen here. It did a breakout and it was a 2 day pullback up here. Let's do a bar replay there. Let's go to smaller time frame also. So you have your entry and your stop loss. So it automatically calculates the high before the pullback. So this was pullback, so this is the high. So that's your entry and stop loss. Now what I'll do, I'll mark up these so that it becomes better visually, and also I'll set up alerts so that I don't have to see it all day. Now you have this 2 day pullback up here. Let's move to the smaller time frame also. So this is your smaller time frame up here, 5 minute. Let's see on this particular day. Now see up here, this is the stop loss here. Here it did crossed your entry level. This is my entry level, 754. Then in this candle it's a good close, closing near the high somewhere, no squats, nothing. 757 is your entry price then. Okay. Here it did moved up in the previous candle, but it closed below this level. Okay. So now I want above this level a good close. So this is above this. So 756, 757, that's the entry point. So 757 is your entry point and your stop loss will be this one. This is almost 3.5% near about. That's your stop loss. The stock simply went up the same day itself. Okay, it moved in your favor same day 7%. Now let's move ahead how it worked. Second day, again a good blast. That's what we want to it to move quick. And it's a final. Okay, so that's a very good move here from your 757. You had a 3.5% stop loss. It almost gave you 50 to 53%. Of course, we'll not be able to catch full. We will discuss that how to in and how to exit part, but it's a good momentum. Okay, 55, 56%. Similarly, before also. Now, will we buy here now? This is also follow through happening up here. Second follow through. Typically, we want to buy on the first follow through itself because that's the earliest point. We should not miss it. If you're missing the first follow through and you're buying on the second, automatically what will happen? Your probability decreases, right? The early you will be in the trend, the better will be. We are not entering that much early. We don't want to enter that late. Okay, we want, if a party is there to start at 8 p.m., we don't want to come at 8 p.m. We want to get the party a bit heated up. Okay, let people start dancing and there are some people around there in the party. We don't want to come first and then start dancing by one, right? So we don't want to come at 8. We don't want to come at 11 also. Somewhere in between is our range. So this is that part. Now here you will not move up here because this is second follow through. That's one way of understanding. Second is it's extended. You see now this going red. So if this is going red, then it's telling you that now it's extended in its overall run. Okay, from here it would be calculating somewhere for 10-20 here, maybe somewhere here, 31-34% on this day here. So this swing then becomes extended. It's measuring the current swing. So current swing is 34%, 34% done from 10 EMA and 33% from 20. It calculates both of the parts. So the indicator also helps you plus an understanding that it's a second follow through which is happening. So the chances can reduce up there. You need to have that thing in mind. Sometimes the second follow through is within the range. It can be played. Okay, it can be played, but your chances will reduce. That's what you need to be aware of. For example, this is one recent one. Look up here, this is your range expansion in this case. So this is a big base which is happening up here. Your range expansion happened up here. Okay, then it took a pullback 1 day, 2 day, 3 day, 4 day. 5th day, it's kind of breakout up here. Your entry would be above his high. Above this high. So somewhere in this big candle you will enter. And then it immediately gave you a second follow through day here also. It can work, but chances reduces compared to here. Okay, that's what I'm telling you. In this case, it's not extended yet. So the second follow through can also be played, but your chances reduces. That's something you need to have in mind. Okay. So this is second. In this case, it then rolled over. Okay, so you would not make any loss up here. Somewhere on cost to cost you will move. Okay. But if we would have taken up here, then it would have been a 5% kind of loss from your entry, 4-5%, whatever it is. But if you took here, then it gave you a 10% kind of move. And in this case, let's see what was the stop loss then. The max stop loss that you need to have is 5%. Okay, if the entry is too ahead. Let's see this example. What would have been the entry price? This is 3rd October. This is 3rd October. Now look up here, it tried to move up here in this candle, but it did not. Now listen to this carefully because you will do this mistake. First of all, you should have waited here for a 5 minute. And once it's a rejection, then you can shift your entry above here. Okay, above this, good close then. Because then this becomes a rejection zone. So you'll have to shift your entry point. If the 5 minutes here is a full rejection, then you can shift the entry above the high of this. Okay, so this is adjustment to your entry price based on what's happening real time. Your original was above this close, but then you have a rejection candle. You have a full squat up here in this bar. So then you shift your entry above the high. Okay, then again here. Okay, this is like a very big single 2.4%. So somewhere here you will enter 204. Okay, so 204 will be your entry price, and here your stop loss is coming 5.68. So I'll keep this maximum at 5%. Okay, maximum at 5%. This could have been entry, or if sometimes it looks like a real big, then you can do half entry. You can play around it. You can reduce up your position size if it's looking too big to you, if you're getting scared. And then balance you can buy if you get another opportunity, or else leave. Okay, this case it was fine. It's not that big. It's just 2.4%. It's fine. For the day, it would have been already up 6% by the time. Okay, so that is not a worry to us. Okay. So here, then let's see what happened. My max stop loss will always be 5%. Max stop loss is always 5%. If it's coming 5.7% from 5.8% from entry, I'll just stop at 5%. Okay, so I'll make my line up here. Okay. Now, in this case, let's see what happened then. It moved up. Initially it moved up fine, and then here. So this is your final exit below 10 EMA. So we'll discuss this in detail in the exit part. But for this example, your entry would be here and your exit will be somewhere here, 1%. But if you would have entered up here, second follow through, you would have given complete 5%. Okay. Plus there are other after post trade techniques like seeing up the wicks. This is one, this is second. So a decision in this case could have been taken a bit earlier. You could have exited up here itself at 3%. All these things we'll discuss in exit, but for this example, just telling you how it can be handled by different ways. So exiting is never an issue. We have very good ways to exit, to understand whether it is reversing, not reversing, to exit in the extensions. Let's see some more examples. One recent trade, then Banco. And we'll see now further more concepts. Okay, we talked about urgency, but what's that urgency? How fast?